time to talk to our personal finance expert, Mary Holm. How long have you been coming in here now, Mary?
Jesse, I think...
Oh, hang on, we'll just turn you on there. Go ahead.
I think it's 10 years next year.
Gosh.
I think. I must look that up, actually, because we should have a little party or something.
Should, yeah. It's a key part of your financial advice, Mary, is not to be too mean and
That's
occasionally
right.
celebrate.
Especially at this time of year, I think we've got to...
Do you think we should go halves in a lotto ticket?
Sure,
Celebrate.
yeah. Why not? Why not?
Nice to see you. I'm
Thanks,
quite
you
excited
too.
by this week's topic as well, because it's actually about making potentially a decent amount of money.
Well, yes, although we've got to be careful. What's happened in the past might not keep happening. But I just was reading an article by Mark Lister, of Craig's Investment
He's great,
Partners.
isn't he?
Yes, he is. He writes some good stuff. And he was looking at returns around the world last year. And I thought, oh, wow, this is pretty interesting. Because these days, the share markets can do pretty well, and it doesn't seem to get acknowledged in the media as much as it used to.
Funny, yeah, I know what you mean.
Yeah. Right, I hadn't sort of realised how well, for example, New Zealand shares in the calendar year last year, they had a return of over 11%, including dividends, which is a pretty nice return. And so I imagine a lot of people who are invested in shares and a lot of people who are invested in shares via Kiwisaver as well. A lot of people are in Kiwisaver funds that have got quite big holdings of New Zealand shares in them. And that should have given them a pretty good year last year.
Yeah.
But what people who are invested largely in New Zealand shares probably don't realise is what they missed by not being in world shares, because while the New Zealand market rose 11%, which, by the way, means that if that continued, your money would double in 7 years. So it's a pretty nice return. It's the best return in the New Zealand market since 2020, when the COVID made the markets go all funny and actually ended up being a good year. But meanwhile, American shares, New Zealand shares rose 11%, American shares rose 25%, including dividends last year, which is pretty healthy. And the year before that, they had a similar return. And meanwhile, Japan, so America had 25%, Japan had 21%, and other big countries around the world did pretty well too. So that when you look at total world shares, they went up 18% in 1 year, which is, that's an awfully good return.
Yeah.
That's you don't get that very often. If your shares continued to rise at 18%, your money would double in about 4 years.
And it's funny, you and I were talking about you having come in for 10 years. I reckon for at least 7 of those years we've been saying, hey, look, the share market's on a really good run here. It can't last forever, but don't get out now because you never know when the peak is going to be.
That's right. And it's still unknown. And I mean, earlier this week, I think it was, the American market plummeted for a day because the American market's very much dominated at the moment by high-tech sort of shares of various sorts, and some of them came crashing down but then largely recovered the next day. And so it looked for a while as though things were all going to fall apart, but they haven't.
What was the headline I saw? The pin that might pop the bubble.
Oh, was it?
Yeah.
Yes. Yeah, but only might. It's... I mean, the American market's done so well in recent times, actually, that... who knows whether it'll... I would be very surprised if it continues to rise at the pace it's been rising, but it might continue to rise more slowly, or it might fall, or it might plunge, or it might... We just don't know. But the other interesting thing that happened last year was that the New Zealand dollar fell against all our major trading partners, and a lot of people in Kiwisaver and just listeners in general probably not too sure what that all means as far as Kiwisaver goes.
Impact on them,
Yeah. But what it does mean is if some of your investments, whether they be in Kiwisaver or outside Kiwisaver, are in foreign shares or bonds, etc., you did even better. So when the Kiwi dollar drops, it means that the other currencies against it are rising. And so if you've got money in those currencies, they do even better. So
something that was worth $1 in the US, when the Kiwi dollar falls, is suddenly worth more New Zealand dollars.
That's right. Yes, that's a good way to look at it. It's
I guess only when you convert, right?
Yes, it shows through in your returns in Kiwisaver and so on. And because the New Zealand, the biggest drop for the Kiwi dollar was against the American dollar, and because of that, given that the American market did that much better than the New Zealand market anyway, and then when you've got the currency effect as well, if you've got investments in America, they rose more than 41% last year. 41%,
yeah.
Which means doubling in about 2 years. Your money doubles in about 2 years if that were to continue. And, we certainly can't expect that. And so people in Kiwisaver, for example, especially those who are in the higher risk, aggressive or growth funds, but also those in balanced funds that have quite big shareholdings, if a fair bit of those shareholdings are in overseas shares, they should have had a good year.
Yeah.
People might not always realise they might be waiting for their Kiwisaver returns to come out in a few more months, but
Worth checking in.
Yeah, it's been a good time, and I suppose the lesson is that it's good to get your money into international shares. Don't try and pick which country, because America could be looking a bit too toppy at the moment, and goodness knows what's going to happen under the new president.
Yeah.
But it's not a good idea to pick a country anyway, whether it be New Zealand or anywhere else. It's really good to have your money in world shares. Now, within Kiwisaver, again, people won't necessarily even know what their money is in, but you can look on the Smart Investors tool, my favourite tool, on the Sorted website. You can look at your Kiwisaver fund there, and that gives you quite a bit of information about the breakdown in investments in the fund. And if you go back to your provider, you can get even more information.
So investing in international share markets is just another way of diversifying your investments. Have your thoughts on that changed over, even in the 10 years? Have you always sort of said, make sure you spread across international as well, or have you said that more now that it's become sort of easier to access some of those markets?
I think I've always said it, but it has become easier. And outside Kiwisaver, you can go into, there are exchange-traded funds, for example, the ETFs that invest in world share index funds and indexes, and or if you don't want to do that, you can do it. Have a look at what your Kiwisaver provider offers in the way of international. One of the problems is that on Smart Investor, etc., they specify how many shares, what percentage of the fund is in shares, but not what percentage is in international shares. So it's not always that easy to tell. But email your provider. I mean, it's an interesting test as the sort of service they offer. Email them and say, hey, can you tell me what percentage I'm in this fund, what percentage is in international investments, shares and bonds, actually. And they should answer that. They should send that, not necessarily that day, but they should get back to you. Now, one of my worries about saying all of this is we're talking about returns in 1 year, and, I should be shot for even telling you this, because I've always said you've got to look longer than 1 year. But when you look over longer periods, you get much the same thing. In the decade before COVID, 2010 to 2020, New Zealand shares actually performed better than international shares in 7 out of the 10 years. So sometimes Kiwi shares are going to do better, sometimes they're not. I've got a whole lot of stuff written down here, and I'm conscious that it's going to be a bit too hard for people to get their heads around all the different periods and so on. But in the past 5 years, New Zealand shares haven't done nearly as well as American and Japanese and Australian and European, not nearly as well. So people who are sticking just to Kiwi shares are missing out, have missed out, and quite likely will in the future. So yeah, I'm conscious as I say all this that people in the government and so on are talking about getting Kiwisaver invested more in New Zealand assets, and in some ways it's hard to argue with that. But I actually think New Zealand is better off if most of the New Zealand investors, including people in Kiwisaver, have got quite a lot of offshore investments as well.
You don't regard this session as deeply unpatriotic, Mary?
Look,
treacherous.
I mean, in the end, we're talking
treasonous
about
even.
Steady on, Jesse. In the end, we're talking about New Zealanders, how well off people are, and if we were all investing all in New Zealand assets only, then what happens when the Rangitoto erupts, or there's a great big earthquake going right through the Wellington fault line, or foot and mouth comes into the country, or something like that really hurts our economy, apart from doing a whole lot of other horrible damage? We'd be better off then if a lot of people have got investments in other countries that are holding their value. I mean, I'm not sure that, loyalty to New Zealand over loyalty to people in other countries is necessarily, desirable.
Okay.
But
I get the message, though, that the stronger New Zealand is financially, the stronger the country will be.
Yeah, I think so. I think so, yeah. And if we've got time to just very quickly talk about hedging, that when you start looking into shares or funds that invest in international shares, for example, the providers are probably going to talk about hedging, which is when you're taking action with financial instruments to take away the effect of the Kiwi dollar moving up and down against other currencies. And in the last year, for example, it would have been a real pity to be in a hedged fund which removed that effect, because it was really good the way the currencies moved to be unhedged. It depends on if you're planning to spend, if you're talking about retirement savings, then to the extent your retirement savings are going to be spent on stuff that's produced overseas, like movies, books, cars, electronic goods, all that sort of stuff, and to the extent you're going to be travelling overseas, it's actually a smart idea to have some of your savings invested in countries overseas, because otherwise you could find that if the Kiwi dollar, now I have to get this round the right way, if the Kiwi dollar falls, it's going to cost you more to... I always struggle with this.
Yeah. It's a bit like daylight savings, whether you gain an hour or lose an hour's sleep.
Yes. I have to write it down and think about it. When I'm on radio, I suddenly get it. The point is that if you're planning to spend some of your retirement money on international travel and imported goods, then it's a good idea to have quite a lot of your savings in international investments to take away the risk that things will go bad for you.
Thank you. Have you talked about how to do this?
Yeah, I don't know whether we have much today. I mean, I think the best way to get into international is just to go to your Kiwisaver provider, perhaps, and say to them, what percentage of my investments in my fund are in international shares or bonds, or have a look on the Smart Investor, and you should, or on their own websites, on the providers' websites. Beyond that, there's online platforms where you can invest in international share funds, etc. There's a whole lot of them. If I start naming some, the Sharesies and Hatcher, two are the ones that have been around for longer, but they're Invest Now. There are others that are a good way to get into some international investing. It's not that sophisticated. It's not that hard for people to do it. Yeah. Don't, I would say, don't directly invest in American shares or something like that. It's much better to do it in a New Zealand-based fund.
Is it?
Yes. Just to
like
keep
Smart
life
Shares,
simple.
the NZX product, I think does some of those
That's
funds,
right. Yeah. If you do it in a New Zealand-based product, they'll take care of all the tax stuff. They'll take care of other complications. Like I was hearing somebody recently about somebody who died, and they had investments in international funds, and getting that money back into New Zealand to distribute to the estate proved incredibly complicated. And I'm not surprised, because I've been actually moving some money I had in America over to New Zealand, and it turns out you get involved in international tax treaties and all of that, or else you end up just paying more tax than you should. And you've got to moving the money from country A to country B is not always as straightforward as you think it will be. All in all, it complicates matters by not being in a New Zealand-based fund, and I just think for most people it's just easier to go into a Kiwi-based fund that in turn invests ideally in an international share fund. Yeah.
Got it. I mentioned this to Laura yesterday. You might be interested. My 13-year-old got her first job over the summer, and she asked me if she could put some of the money she earned into one of those online share trading things. I had to think quite hard about it, whether that was a good idea or not.
And what did you say?
Eventually decided to do it. Part of what put me off was the idea of it being gamified and the sort of notifications turning into just another reason to look at a screen. But actually, we've had a play around with the one that we're using, and it's not that full on at all. Actually, it's not that gamified, and it was a good chance to talk about ETFs.
Yes, and I think
so. I've got a little one, and she's got a little one, and we're
good fun.
Probably only checking in on it once a week, which is good as well.
Yes.
Not obsessing about it. So.
No.
So far,
and young ones who sometimes get involved in shares can sometimes get really carried away and put a whole lot of money into Microsoft or something because it's risen fast lately. And it's actually often quite a good way of learning a lesson. By the time they're 20, they're saying, oh, perhaps that wasn't so good. But, and if they continue to do well, they'll find out soon enough, young enough, that picking individual shares is very iffy. Yeah. Yes.
You remember the lessons when you pay for them yourself rather than just reading about them in the paper, I guess.
Definitely.
Thank you. Nice to see you.
Yes, you too, Jess.
Mary Holm with thoughts on investing your Kiwisaver in particular in international share markets.